Testing, testing. 1, 2, 3. All right. Good morning. Good morning. Good morning. How are you guys all doing? Our stock and futures traders all ready to go, all warmed up on this new Friday morning. Markets have been going crazy. What? Lan, why have the markets been going crazy already? Oh, I'm glad you asked. Let me show you. For those of you who were here yesterday, you already know because we talked about it yesterday in class, right? Today was non-farm payroll day. And so at 6:30 this morning, we had unemployment rate and non-farm payroll come through. Let's look at that for just a second before the opening bell. The market's going to run here. We're going to watch this market just for a few minutes here on the opening bell. Then we're going to run in and we're going to start looking at what CRAMER'S picks were. Today is Friday, so we're going to do the stock market. We're going to go over and look at the stock investments because what we do is we trade in the futures market for income. We then take our money out of here and we go put it over in the stock market and we trade it for as an investment for retirement, or, oh, heck, you don't have to go put it in as retirement. You could go put it in there and just grow it, or you could just go buy Lamborghinis with it. I don't care what you do with your money. Do whatever you want. All right, that's what I do. I like to trade in the futures market for income. That's my income replacement. Then I take that money over and I put it into the stock market and I invest it. Okay, let's look at this non-farm payroll. It's getting close here. We got, what have we got? 28, 29, 30. We got 2 minutes and 5 seconds. Yep, 2 minutes and 5 seconds. 2 minutes. Now we got 2 minutes before the opening bell. Let's see if we can cover this real quick in 2 minutes. We got 1 minute for non-farm payroll and 1 minute for unemployment rate. The forecast for the non-farm payroll was 195,000. All right. The actual was 275,000. So you're like, hey, non-farm payroll, that's gone way up. Yeah, but previous was 229,000. And consensus was 200,000. Forecast was 9, and it was at 275,000. So non-farm payroll, that was bullish. And so that's why you see that market took off and ran like a wild man, wild dog right up there. Took off like crazy on non-farm payroll. But then you had unemployment come out at the same time. Unemployment says the forecast was 3.7, consensus was 3.7. Previous was 3.7. So they didn't think there was going to be any change, and it came in at 3.9. So that's actually good. Oh, no, bad. Sorry. Non-farm payroll, 275. So this is unemployment rate went up to 3.9. That was bad. So that's why the market kind of shot up on good news for non-farm payroll. Then unemployment plummeted, brought it all the way back down. And then they said, well, I don't know, maybe we should go up, maybe we should go down. I don't know, maybe we'll go up or down. So it went up or down. So that's what generally happens on these dumb things anyway. It's not for us to determine whether the market thinks these are good numbers or bad numbers. It's just a setup. We'll look for the setups and triggers and take the setups and triggers in whichever way they decide they want to push the big players want to push the markets. So there's a lot of indecision. You can see that was an indecisive market, but I want to make a point about that unemployment rate at 3.9. That's a tick up from 3.7, which was the previous, and they could forecast to be 3.7, and it was 3.9. They've been jerry-rigging that unemployment rate. They don't count people who don't work. Wait, what? Yeah, they changed the way they calculate the unemployment rate because it was too high, and it made them look bad from a political standpoint. So the administration went in and said, well, if they haven't worked for I don't know, let's say 6 months, then they're no longer on the employment rolls. They're now on the I don't want to work rolls. And so we don't count them as part of the employed. So they're now the lazy boys sitting in mama's basement rolls. And that doesn't count as somebody who's unemployed because they don't think they're in the workforce because they've left the workforce. They are not actively seeking a job, and so let's not count them as in the workforce. Therefore, all of these unemployed boys that are sitting in mama's basement playing video games are not counted as unemployed. So they wiped all those guys off, and now suddenly the unemployment rate plummets from 8, 9, 10% down to 3.9% because if you don't work, then you're not unemployed. So the only unemployed people are the people who are between work, shifting from one job to another. That's now the new unemployment rate. So that's what that means. there was 3.9% of people who are actively seeking jobs who are transitioning between two jobs. That's the unemployment rate nowadays. So if you stop working, you're not unemployed anymore. All right. You don't show up in the unemployment rolls. You show up as the lazy ass who we don't count rolls. I don't like that personally, but I guess to each his own. It makes the politicians look really good, because we've always considered anything under 5% was absolute 100% full employment. There was no unemployed if that was below 5%. And they've been running this thing unemployment rate at 3.9 because they don't count the unemployed or the people who aren't working. They only count the people who are transitioning between jobs. How do you like them apples? That's how we make ourselves look like we can stand up in a State of the Union and say that unemployment's as low as it's ever been. I have the least unemployment of any president in U.S. history. Yes, you do. And we are amazed. 4 more years of low unemployment. Okay, let's do that then. How many of you watched the president speak last night? In your comments, just real fun. If you thought that was a great speech and he did a great job, go ahead and say, great job. If you thought he was kind of a little less than great job, don't say anything. Let's just give him kudos. Go ahead, say, great job, President. We really enjoyed your speech. Go ahead and say that in the comments down there. We got a whole bunch of people watching. Not very many people comment in. I got a lot of people who come and watch us but don't subscribe. Go ahead and subscribe, guys. Subscribe to the channel. We like to have you as subscribers. So, Bruce says, I agree with you, Lamb, that regarding the new way of calculating the unemployment. Kind of not very good, in my opinion. Right, Bruce? Kind of a weird way of saying it. Well, if they're not working, then they're not unemployed. Oh. Okay. All right, then. We've got 10 million people who just come across the border. How do you count them? Unemployed? No, they're not unemployed either. They're just on the $2,000 a month credit card deal. Not unemployed. Okay. All right. I guess, that's how you count things. That's how we count things nowadays. That's how we do it. All right, let's watch these markets. The ponies are running, not very hard. We got the NASDAQs running a little bit. What we're going to do today, you saw it on the marquee. I'm going to get off my soapbox here. We're going to get out on the Michael Bruce. Who is the president? That's a good question. Nobody knows. All right, let's see. We are losing my train of thought. We're going to look at the stock market today. Last week we set up all of Cramer's picks, and he gave us some stocks to look at. We went in and played with them a little bit, put some orders on some of them. Some of them turned out really great, some of them not so much, but that's pretty much the way things work, right? So we're going to go look at that here in just a minute. And then I have a new letter from Cramer where he gave us some new things to look at. So we're going to add that to our Cramer list, and we're going to go in and play with the stocks a little bit. And I just kind of wanted to see if anything come popping out of this morning session here in the futures market. Again, we like to day trade these. Nothing's really happening over here. Yesterday, we tried to day trade the metals, and holy cow, got our heinies handed to us because those markets went absolutely nowhere. They were flat as a board. Flat as a board. That's what they were, as flat as. Flat as a board. Could not believe how flat they were. And so they went nowhere. So we played football yesterday. Did you guys like that? Did you like the football scenario where we got in and the ball up, Bulls and Bears, and the quarterback and the running back and the linebackers? Those linebackers were pretty damn good yesterday. They kept tackling us behind the line of scrimmage. So the market just would not move for us. And it doesn't look like it's real too excited to do anything right now either, does it? Not too excited. Pretty quiet on a Friday morning. Like a Friday even on Christmas Eve. Who was it that said that? I love that saying. I tucked that one away. I think that was either, was that Bruce? Was that Bruce? Was that you, Bruce? Or was that Lowdown Killer? Somebody said that in our little class here. And I've adopted it. It's quiet as a Friday evening on Christmas Eve. Look, these things ain't doing nothing. We're not even getting that rally in a flush. Getting a little rally down here on the Russell. I got this kind of scaled down so you can see yesterday's bracket. That was the high. That was the low of yesterday's bracket. So we're actually bullish. We're above the market. Yesterday's high. Yesterday's opening high was right there. So we moved up $1,800 from yesterday on the Russell. We're going to take that little, we're going to see if this thing wants to flush. Yesterday, remember, we were trying to look for the extension, for the upside. We wanted to see this market go up and make an ABC. Where's my pointer tools? We're looking for it to go up, come back, right, and go up again. And it didn't. It just went up and flushed back down. And we see that a lot. It doesn't always extension and continue. So this time I decided what we'd do is we'll throw an order on here and see if it wants to fall back down and touch new lows. Watch, just because I did that, it's going to turn and do the extension today and do an ABC pattern. But what do we got to do? Well, we don't take big risks. We're going to come in here and we're going to put our quarterback here behind the line of scrimmage. And we're going to put our limit order out here. He's going to come back and he's going to be our receiver out there. And if it comes back down and tests this low region down here, then we're going to throw a long bomb, and that's going to be our pass right in there. So if it looks like the linebackers are going to push it back up again, pushing us back up past the line of scrimmage. Come on, you rotten linebackers. Don't come back and tackle us behind the line of scrimmage today. If we take one loss, we're going to go over and jump into the stock market. Come on, you rotten little bugger. What's that, Land? What'd you just do? Take a reversal. If that thing comes back and stops us out, I'm going to take one reversal. That's all we're allowed. One reversal. See if it wants to go up. I thought you gave us two reversals, Land. Last time you said two reversals. Why are you changing that up on us? Well, that was last time. This time we only get one reversal. No one size fits all. It's just got to do something. If it does nothing, we lose money. If it does something, we make money. But you got to find out when a market's going to do something. Okay, this market, we're going to look back on that and we'll be really mad we didn't go long right there. If we don't go long right there, I told you, we're going to be really mad. There it goes. Now we're long this one. All right, we got stopped out. Get your man off the field. Man off the field. Come in here, put our quarterback back in here so he can get tackled behind the line of scrimmage if this market doesn't go. And then we'll put our limit order out here, put our receiver out here. Watch that Dow break that little triangle formation and take off to the moon, and we'll be sitting down here on the Russell doing nothing. What a dead market. You'd think it was a Friday on a Christmas Eve. All right. Yeah, Quinn's not kidding. What a wimpy opening bell. Yeah, let's hope the linebackers are asleep today. Look, I told you that Dow was going to go right there, and we're going to be mad if we didn't get in it. Look at that damn thing. I almost clicked that button, but it took off before I had a chance to get over there. Doggone it. There we go. Shaking out the weak sisters and the shoestring salesman. Old Paul Britton used to say that all the time to me. Lan, why didn't you take the Dow? You could act like you were really smart today. Because I'm over here on the Russell doing nothing. Russell's dead. Dead Russell. At least come on, get up there. Giddy up. That Dow's really going. I'd have looked really smart if I'd have clicked the right button on that one. I called it out, but I didn't pull the trigger. By the time I drew my line, and went over there to click the button. It had already rallied clear up here, and I was like, oh, that's already touching the previous high. I'm not sure if I want to get in right there. I thought it might pull back just a little bit, but nope, this thing's just going to the moon, leaving me behind. That thing's going up too. Oh, we got stopped out. I was going to move that limit out a little bit. Well, we took a profit. So, Lan, why are you down so much? Why are you down $400? Well, if you remember, we did a seasonals trend. I'm going to pull that up. I'm going to show you why that market's still down, because we bought an option, remember? Now, this is a good lesson. So I kept this for us to look at, because this thing came down, and the seasonal nature of the market was that this thing was going to have drive 1, drive 2, drive 3. That's not the seasonal. That's the technical. If you remember, we read Trade Miner. And Trade Miner, let me get this down here, blow this up. Trade Miner said that we should take a short right here. Remember, it said, seasonally speaking, this market falls. And what did I say? I said, hell no, I don't want to do that. Why don't I want to do that? Because it's, technically speaking, we're at the bottom of a third drive, and we don't want to be taking a short position at the bottom of a third drive. And so we talked about that, remember? In fact, there's I think it was Lowdown Killer talked about that with me out there in the comment section. And he asked the question, what do you take, seasonals or technicals, one over the other if they don't match? First of all, I don't like it if they don't match. And if I'm going to take one or the other, I'm going to take the technicals over the seasonals, because the seasonals are what it's done in the past, right? Past performance is not necessarily indicative of future results. Just the best information we got. But if it doesn't correspond with the technicals, I don't take it. But we took it here. I think I took it as an example. I'm like, okay, we're gonna put the seasonals on there. We're gonna take a short position, but I don't like it. I wouldn't have done this with real money, and I didn't go back and do it with real money, because I was like, I am not going to take a short position at the bottom of a third drive. The probabilities of that thing falling are really low, because that would be a D drive. Remember we had that conversation. So I'm holding on to that so I can give you this lesson. See, we're down $400 on that $1,400 call. We're down $412. We paid $1,406 for it. It's only worth $981. That market's come down, hit that bottom, and it took off and started to rally right off that third drive. All right, Michael Bruce, count these out with me. Count these out. Let's do it backwards. It's easier to do it. It's easier to do it backwards. We're going to call this our C1, right? So we're going to go, that's our C1. Ooh, that's a long little C1. There we go. C1. That's actually not a C1. It's a C. It's the third bottom of a third drive. So it's a X, not a C1. C1X, because we're short. That would be short. So this is an X3-A1. Did you get that, Michael Bruce? Did you correct me? X3SA1. That makes this one here X2SA1. X2SA1 on the probability table. If you don't have the probability table memorized, go get it so you can memorize it. It's in this book right here. All the probabilities that we're talking about are in this book somewhere. I don't know if I can find them quick for you, but they're in here somewhere. Okay, this is the probability table. It's in this book. What's that book, Lan? You took the cover away too fast. Let's see. It's called Stock Market Playbook of Strategies, The Fibonacci Effect. It's out on Amazon. Just search Lan H. Turner, and it'll pop right up for you. And it has the probability tables in here. And this is how you read these charts so that you know what the probabilities are. So that you know, it's like playing blackjack. You have a probabilities card. When you go down to Las Vegas, you can sit at the table with those little cards that are in the bookstore. You can buy those little cards that tell you the probabilities, and you can go sit those. They let you take those little cards right to the table. You can put that little card right in front of you when you're playing blackjack. And when you see what she's got, you see what you've got, and then you look at the little probability table, and it tells you what your probabilities are of whether you're going to win the hand or not. Well, we do the same thing in the stock market. So you got to learn how to read the market, read the charts, and read these patterns, and then we have a probabilities table, and it's all based on past performance, what markets have done in the past. So this is X1S A1. So what is the probability that the market is going to continue to fall on an X1S A1? Very high. That's our highest probability that the market is going to continue down. What's about the X2S A1? Well, that's a second highest probability that the market's going to continue down. And what about the X3S A1? Oh, get your S in there, Lion. X3S A1. Well, that's your lowest probability that the market's going to continue to fall. Doesn't mean it can't. It's just that it's a very low probability. And so for us as small blackjack players, traders, for us as small traders, we don't want to take really low probability trades of success. Don't do that. If you do that, you got a really low probability of making money. And who wants that? Everybody wants high probabilities of making money. So the high probability of making money is to say X3SA1 has the highest probability that the market's going to go this direction, not this direction. Okay. So this is your A1. So that would be an A1. X3 is your exit to the short side. That's why we put in X3. That means this right here would be, this would be we got hindsight, so we know. That's your X3 down there, X2, X1. So this would be your A1 right here, A1S. Okay, it's right there. That's your A1S. So this would be B1S. Is that right? No, I'm off one. Because that's going to be C1S right there. So this is B1S here. This is going to be A1S there. A1S. You see, I use this little blue lights to tell me where these are. So if you don't have these little blue lights, it's kind of hard to know where these points are. So these little blue lights point them out. What are those little blue lights? That's called the bulls and bears. It's what's turning the price bars red, yellow, and green, and has these little blue lights all tuned into the Elliott wave pattern, and that's what we're counting. We're counting these Elliott waves, all right? Elliott waves, that scares me. That's a big word, Elliott wave. C1S. Don't worry about it. It's just some guy's name. All it means is it's 3 drives. Drive 1, drive 2, drive 3. That's an Elliott wave. All right. And then when we get to the bottom of an Elliott wave, we generally get an ABC, A, B, C, D pattern going the other way, just like that. That's the probabilities. So if you have your little probabilities table down there, you know what the probabilities are. Okay. So we got A1S, we got B1S, we got C1S. So this would be your first drive to the downside. That's your first exit. Second drive to the downside. That's your second exit. Third drive to the downside. That's your third exit. That means we're at the bottom. That means we don't take short positions like the seasonal nature of the markets told us to do in Trade Miner. But we took one anyway just because we wanted to do it, right? We wanted to example it, see what happened. Because if it would have dropped, we'd be going into the D1S, right? And that's very rare. Like unicorns, D1S, and it could still do it. I'm not saying it can't. Seasonally speaking, it generally falls during this time of year, but falling at a D1S is a really low probability. So we don't want to take that. All right, guys, that's where we're at with that one. Let's get out of here. Spending too much time on it. Okay, here we go. This is our big winner of the day, NVIDIA. NVIDIA. How many of you have NVIDIA? I have NVIDIA, and it's made me a lot of money this year. Been making good banking NVIDIA. That's up $10,000, $12,000. That little option right there we bought on that little flag. Remember that little flag that we put that on right there? Boom, boom, boom. That thing came in, and we said, let's buy that baby. Buy, buy, buy. And up it went. Straight up like it's on Viagra. Not like anything, just like it's on Viagra. That's all. Okay, now, this is Apple. Remember, I said, I don't like Apple. Apple is not a good company. And I said, if it bounces and goes, it could go off of here. And if you wanted to buy some Apple, you could. And that's why we drew that arrow in there. It's at the 61.8, but I didn't buy any Apple. I don't own a penny of Apple. Why don't I like Apple? I went through this last time. If you remember, I don't like Apple because Apple is not playing the AI game. And the reason this baby right here has gone to the moon is because it's all about the AI. This is the hardware manufacturer that makes the chips that makes it possible to do ChatGPT, do AI. All right. And those of you who are not, does anybody not know what AI is? The probabilities table. There we go. Bruce is working it out for us. Probability section is on page 41 in my PDF version of your book. There we go. So those of you who have the PDF version, it's on page 41. If you want the paper version, it's probably on the same one because I use the PDF to publish the paper version. So should be right around close there anyway. There might be a couple extra pages on the printed version that's not in the PDF. So go get your probabilities table. It's on page 41. Thanks, Bruce. Appreciate that. All right. Where was we? Where was we? Where was we? Where were we? We were talking about Apple because Apple sucks because they're not part of the AI world. They still have not done anything on AI. And so their stocks are flushing and they've been buying back their stocks, the rotten little cheats. What does that do? Well, that makes their profits to earnings or PE ratio go up, even though they're not going up, because they take the number of shares outstanding in consideration for their PE ratio, profits to shares. So if they reduce the number of shares, it makes it look like they've got more profits. They're lying to you. It's a little game they play, but we know nobody ever in these games. No, nobody ever plays games in this market. Oh, wait a second. We just got Pitt News Magazine and Cramer said it right on video that they lie to you in every single thing they do. Everything's a big lie. It's all a big game, right? So it's not me saying it with my little tinfoil hat. We got Cramer saying it right on video. The whole thing's a lie. How many of you guys got that Pitt News Magazine and saw that? If you don't have Pitt News Magazine, I don't know how you are surviving. How can you even breathe in the morning without it? How can you even suck air into your lungs without Pitt News Magazine? Go get it, pittnews.com. We got another video on Cramer coming out. We got him on video saying some other stupid shit. So, oh, damn it. I just swore again. Now I have to go confess one more time. Who was it telling me to do duck poop or fish poop or something? And so I didn't have to confess. But those don't roll off my tongue like these do. I'm a reprobate. Okay. Here we go. Drive 1, drive 2, drive 3. Drive 1, drive 2, drive 3, all the way to the bottom. Okay, but that's good news for those of you who love Apple. That says that we're probably coming down into the bottom region, and this thing's going to probably bottom out down in here somewhere, and then it's going to be the bottom of the third drive, and we got a really high probability that it's not going to go any further. So if you're holding on to your Apple because you're a bag holder and you like to hold on to Apple and just never sell it, well, that's okay too, I guess, because you're going to be trying to collect the dividends, which are almost next to zero. Does Apple even have dividends? I can't even remember if they even have dividends. I think they consider themselves a growth company, so they don't give dividends. And if they do, they're little teeny itty bitty ones. Little itty bitty teeny ones. Does anybody know? Just say ship. The ship has sailed. Does anybody know if Apple even does dividends? I'm not even sure if they do. I don't even think they do. They might have little tiny ones. I think it seems like I remember said that they were going to start doing little itty bitty tiny dividends. They consider themselves a growth company, so they don't do dividends. But anyway, nonetheless, we're at the bottom of a third drive pattern on Apple, and so this might be a good place to start adding in some positions if you're like me and you don't have any. But I'm going to wait for this thing to bottom out. I don't think it's going to turn around and just suddenly go straight up. It's not going to do that. It's going to come and do one of these things where it's going to round out the bottom down here. Unless they announce something with AI. If they'll announce something with AI, it could do a V recovery. It could just go straight back up. And a lot of people like Apple anyway, so it may, once it starts to go, people might jump on. But nonetheless, I think look right here. This is what we could see. This was the bottom of a third drive pattern in Apple last time. 1, 2, 3. And then it just went straight up. So it, boom, just like a rocket ship. And I rode that up. I made a little bit in there, not a lot, but not nothing to really brag about other than to say I picked it right and made a little bit of money. So I rode it up there, and then it kind of did its little hesitation, and I think I caught a little bit more in there too, but not a lot. I think I was out by the time I got up here. I don't think I got much up in there. I had to add some more back in. So we may get the same thing here. Drive 1, drive 2, drive 3, round out the bottom, or we may get a V recovery down here at some point, just like it did last time. if they can give us some good news. They got to say something about AI, but guys, come on, tell us what you're doing. They're supposed to be making Siri be AI, so it talks as well as it actually works. And we did a demonstration on that last time. We pulled up AI and we pulled up Siri, and there was no comparison, right? Remember? Now we got Amazon. All right, let's look at Amazon. This is our last drawing. Lots of arrows. 3 drive patterns. Drive, drive, drive. Drive 1, drive 2, drive 3, drive 4. We're in a 4th drive. Very unbelievable. That's Amazon. Amazon's kicking butt and taking names. So there's our last little natural head and shoulders right in there that really didn't have much of a right shoulder. Remember when we talked about that before? So that was our buy signal coming up out of that second. It was a retracement of an A, B, C, D down. Didn't go for the 3rd drive down, and away it went. That thing took off like a rocket ship to the moon. And you know what? I am feeling really bad FOMO on this one because I did not make one damn red cent on that Amazon run. I was not in Amazon. Here's Caterpillar. We did our Fibonacci cone of probability. Remember when we did that? So here was our pullback. This is our ABC, or our head and shoulders formation, coming back down that red line. We're watching the chalk and money flow. This thing turned and started to rally right here. This is Caterpillar. I got a little piece of this one out of Caterpillar. I didn't maximize my returns on Caterpillar, but I got a piece of it. So I don't feel as bad as I do about Amazon. But then that thing rallied up, broke out, did its 3rd drive. We're drive 1, drive 2. We're in the 3rd drive. We're up here testing this previous high up in here. We're broken through it on the D drive. This is actually C drive, A, B, C. And that's your cone of probability. So let's see where we think that market's going to go from here. A, B, and the lowest point is C. Where did we put that cone of probability? Right in here. So that's our target right there. If we do 100%, that would be our target where we'd want to take some profits, or at least be happy with our trade. So keep that in mind. So that one's doing good. We're up $1,305 on that one, on that Cramer recommend. I didn't put anything in on the Amazon because we're up at the top of that 1, 2, 3, 4th drive. So I was like, I don't want to be buyer at a 4th drive. That would be going against what Land said to do. Land's the guru. He knows. There's Apple. We already did that one. We didn't put anything on Apple either because I don't like Apple. That was at least a good move there where we didn't put anything on Apple because we drew that arrow. We said we could bounce here and go up, but I don't trust it. It's on the bottom of this drive. I think it's not good. They've been buying back shares, and that's always a bad sign. Okay, so let's go into COF, Capital One Management. So this is, where did we get to? C1. So we're at the top of a C1 drive. So this is the 3rd drive, and it's trying to go up, isn't it? We bought an option on it, didn't we? Bought a little put option just in case it flushed as our insurance policy. We're losing our insurance policy. We're down $105 on insurance because it is at least going sideways. So our insurance is about dead. We're up $100. Oh yeah, we're up $100 on our call option. But because we bought insurance to the downside, we had to pay for that insurance. That's why we're still down $5. That market needs to do a little bit of explosive run right in here. That C drive right in there, crossed right there. We need it to go. Go, 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 baby. Rock and roll. Go, go, go. We've only got a few days left. We've only bought a little tiny short 42-day. Oh, no, this expiration is for our insurance policy. Let's slide that out. I bet you we got another purple line out there. Yep, there it is. There she is. There she blows. All right, so we're looking for the C drive to rally. That's all we're looking for on that one. Discover Financial. What are we doing here? Again, we got the little head and shoulders bottom formation. We come up the big long drive, the pullback, the next drive. So this was this right here is going to be right there. That drive right there has got to be our A1, doesn't it? So that's our A1 to the upside. So if that's A1, how are these big boys reading this? They're going to read it like this. They're going to come in here and they're going to say that is B2. What big boys are you talking about, Land? Big boys. The big boys, the ones that move the markets. What? They run Elliott waves? You bet your tiny hiney they do. You bet your tiny hiney they do. Where do you think I learned this? I learned it from them. I didn't come and make this shit up. I learned it when I was working at the Board of Trade. What? Lan, you worked at the Board of Trade? I did for about 10 years. I worked back there. I'd go back there and teach at the education center. And I didn't teach a damn thing as far as I was concerned compared to what I learned. I learned so much more than I ever taught. I taught people how to use computers, how to use computer software for trading. But man, I was back there learning from all the guys that I was teaching. They were teaching me. They were traders learning how to trade on the computer, and I was teaching them how to use the computer. But they taught me how to trade. I taught them how to trade on the computer, trade their methods on the computer. That's how I got here. I learned so much from them guys. They taught me all their secrets. ABC, C-A-B-C. There you go. Nothing but ABC. So we're in the C drive. Same thing as cough. So let's go look at Disney. Disney had the cone of probabilities. Disney's been rocket shipping up. They've not been having too many good winners on their movies. They've not had very many good movies lately, and none of their movies are paying off. Not making any money on movies. They've got a bit of a problem with their movies lately. They can't attract a good audience to them. So what are we doing here? We're down $47 and our insurance policy is down $27. So overall we're down $74. That probably had a little bit of a winner in there for a few minutes as it broke that C drive in there. Let me get that thing up there, that C drive. I don't know if I can get it out of there. It's stuck down in that hole. Can't get it out of there. No, it's that blue light crossovers to the C drive. Just delete it, Lan, and put it back in there. I don't want to delete all notes, just this one. C1. All right. Yeah, it stuck it down there again. Doggone it. Delete. Come over here and do it. C1. Okay, that's better. Can you move the whole thing at once? No. All right, I guess I've done it before. I don't know how come I can't now. There you go, C1. That's them little blue lights right there. When it broke those blue lights, that becomes C1. And then immediately flushed, so it failed, which is a break above that previous high right there. So it broke above that previous high and failed. Now it's flushing down. I think it'll go back up. We'll try it one more time and look at that thing go. So we'll see. That's what I'm thinking it's going to do. We'll come in here, go to Estee Lauder. Estee Lauder. We bought a call option on Estee Lauder because old Cramer said that this was a good one to buy. He was all excited about it, right? But it looked pretty sad to me. This is a slow growth thing. ABC. It's coming in here, breaking our line, breaking our trend line right here. Breaking that trend line. We got to see that baby rock and roll and head up out of there. We've just got a call option in there. We're down $40 on it because that Estee Lauder just is not rocking and rolling for us. Come on, baby. Sell some Estee Lauder. What do they do? Like hair stuff? Estee Lauder. Makeup? I don't know. Come on, ladies. I think it's a lady stuff. Go buy your lady stuff. All right. Global Foundries. This is one he was really excited about. And I was like, what? I'm not excited about this one, Cramer. I'm not real excited about this one. It's just been going straight sideways. I don't know what the heck he's excited about it for. I wanted to sell premium on this one, not buy anything. Look at that market. Just been going sideways. Nothing. But he was all excited. Remember? He got all excited about that one. He had all kinds of stuff he was saying about it. I saw it here as an A1, B1, C1. Failure, A, B, C down. And it's just so neutral. Cramer thinks that thing's going to go to the moon. All right, buddy. We bought a call for you. And we're down $170. Not appreciating that. Okay, here we go with the next one. Here we were talking a little bit about Home Depot. Let's scoot this down so we can see a little better. Home Depot. One big long drive. So that's a B drive. That's the C drive. So we're in the C drive. X2. We're coming into X3. Let's get rid of some of these. Delete all the arrows. We'll get rid of this too. So we're coming into the C drive. This should be C. Oh, look at that. I got it to move. Oh, no, that was just not the whole thing. So this is our little B1. That's A1 down here. It's just not labeled. This B1, C1, X2. That means this is going to be, that almost feels like one big long drive that kind of broke, doesn't it? Well, almost feels like a little 3-drive path, little fractal wave, doesn't it? Like This is like drive 1, drive 2, drive 3. Inside of a drive 1, drive 2, drive 3. That's probably what's going to happen. We'll probably see this thing come back and break down here and then turn and rally. That's probably what we'll see. Let's watch that one. We should have an opportunity to buy into this one. We're not in it, right? We didn't buy a Home Depot. So we want to see this thing break, but then we'd be up at the top of the third drive of this. Well, it'd just be a fractal. That would be the B drive. I think this is drive A. I'm going to call this drive A. We better make some notes for next time we come in. This is drive A. Actually, let's label it just like this. Drive 1. Okay. Are you happy with that? Does that work for you? If we call that drive 1, and we come in here, and we're going to call this drive 2. And I make some notes for myself so that when we come back next time, I'm going to call this drive 2, and I'm going to make the notes in here that say this is a fractal. Fractal. Fractal? I don't know how to spell fractal. Fractal 3 drive pattern. Pattern? That's good enough. Fractal 3 drive pattern. So this is in the drive 2, and we're looking for drive 3. All right, and we're coming into springtime on this thing, and a lot of people do home repairs in the springtime. So Home Depot should be a good buy in here if we can get just a little bit of a pullback and an opportunity to buy on the dip. Buy the dip, buy low, sell high. All right, buy the dip. All right, there's mags. Mags. I just came in here. Now, mags was not anything that Cramer talked about. I just came in here and wanted to buy some mags for our account so that we could have a winner. All right, so that's our mags, and we just bought some shares. I just put 105 shares in there, and I think I actually did that. I demonstrated that with the end of day pat, where I was like, how much do we want to risk? And then we put that in there, and so we're up. We put 100 shares, 105 shares in mags, and look at this baby rock and roll. It almost makes me say this is like drive 1, drive 2, drive 1, 2, 3. 3 little drives inside the drive 1, drive 2. Same thing as that other one. We're almost getting too many drives in here. Little ABC patterns in there. But what we want to do now is we're just going to bring our order to break even. We're only up $153, but we should shave some. We should do a little scalping trail here. So let's come in here. We're going to delete this, and we're going to let's come in and trade. We're going to sell 25 of them. Let's sell 25. Let's sell 30 of them. 30 sell. All right. So we took some profit, and now we're going to come in and we're going to trade, and we're going to take 75 of them, 50, and we got to make that 75. And we're going to put a stop in here, right there at break even. Okay, so if it comes back, we'll just get out at the line of scrimmage. Otherwise, we're going to go downfield and let's see how far that baby can rock and roll. Okay, let's see if we turn the chart up at A, B, C. There we go. Not a good one. Where's our Heikin-Ashi? Oh, it's on. Oh, there we go. Let's go to the ATR. This is not a good setting for this chart, is it? Not right now, anyway. Okay, let's turn it back off then. We'll just leave this stop at break even. Bring the quarterback up. So is that the quarterback sneak right now? What am I doing? Charts. So we're going to leave that right there. How's that, guys? You happy with that? Take a little profit, do a little scalp, do a little trail. Okay. NVIDIA, we talked about that one. We're very happy with this one. We're up $13,000. Now, do you want to take some profits? The problem is we're in here with a damn option. And so if you want to take some profits, you have to just liquidate the option. It's not like you can come in here and take half your profits. We only put 1 on. We should have put 10 on, right? Hindsight's always 20/20. Land, why didn't you put 10 on? I'd have put 10 on if I was trading it. Let's see. How do we take profits with an option like this? Well, there's several ways you can do it. You can protect your profits by coming in here, and let's think about this. How could you can't take your profits, because if you take them, you have to close the position out. But we can do some profit protection. in case it flushes. But we have to spend some money to do that. So if we come in here and said, well, I think it's going to, within the next 7 days, we might get a pullback. All right. I know this thing's on fire and you think it's never going to pull back, but even markets that are on fire still have little pullbacks like this. See that? Pullback. So if that happened to us, do we want to protect our, if we had a little pullback in there, if it came up and popped down, how many bars did it go last time? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bars. So where are we at? 1, 2, 3, 4, 5, 6, 7, 8. We may have another 10 bars and then maybe the thing will flush. So the way we can protect that is we just buy a put, right? But we have to buy an inexpensive put. Don't want to buy an expensive one. We don't want to do 0 days till expiration. That's just protecting today in case it flushed today. And it's up big today, so don't really feel like I need to do that. I want to take some, I want to protect myself. So what I do is I buy a put. So we buy a put 7 days out, and we put that at the money. See, the problem is that damn thing's $3,000. If you buy it clear down here at the money at the same price, that's $140. That's not bad. We could do that. That market flushed hard. How much are you willing to buy some insurance? You're just going to pay for it. We got a profit of 12 grand. We could buy one of these things. We pay $200. $200 for the next 7 days. 7 days, and there's only 2 trading days, $5. How much is that? 200 divided by 5. So it would be $100 a day, $200 a day. So we'd lose $200 a day, right? No, that would be 10. We'd lose $400 a day. No, 40, 10. Yeah, man. What's 200 divided by 5? It's actually 200 divided by 7. But we don't have two trading days. 200 divided by 7. We're going to lose $28 a day. Is that worth it? Yeah, I think it is. Let's do 200. Okay, we're going to buy a little put option right there. We're going to pay $200 for it. It's only going to protect us for the next 7 days. Let's mark it into that. That's just in case it flushes, just a little insurance policy to help us protect some of our money. All right. So that thing suddenly flushes, that put option will shoot to the moon. Probably won't make as much money as we're losing on the call, but it'll dampen the pain. All right. We could do that. We could also come in here and we could sell a call, right? We could sell a call up here. This is called a covered call. The next 7 days, we could sell. Look at that. You think it's going to go way up there in the next 7 days? You can make $650 selling that thing. Make $1,000 right there if it went up there. Anything above there, you're going to stop making money, but it's going to make you money. $1,000. Let's do it just for fun. That's a covered call. Len's making this thing too complicated. Problem is, if I sell that, receive without margin requirement, I don't have a margin because I got it covered right there. I'm buying it and I'm selling it right there. They're not going to margin me? Okay. Let's mark it into that baby. Okay, we're going to make $1,000 more in the next 7 days, but anything above this line, we stop making money until that purple line. All right. So we're taking a risk that we're sacrificing anything above that red line until that purple line. But we're going to make an extra $1,000 to do that. All right, let's do that. Okay. Vizio. I took a long position on Vizio, and man, I don't know what the heck happened to that thing. Look at it. It's deader than a doornail. That thing is the deadest thing. It must be a buyout or something. Let's do this on this one. Exit chart. I don't know what the heck Cramer had us doing on that chart, but I am done with it. Bye. All right, Walmart. Look at that old Walmart. We thought it might get a little bit more of a pullback on that break, didn't we? So that one there, label it land. Give me my labels. All right, this is X1. That one's X2. That makes this one, we don't have an X3 yet, but it would be X3S. X3. No, X3. X3 A1S. All right, you guys, memorize your table. Get your table memorized. I'm doing my best to memorize it. Okay, there we go. A, B, C, D, Lynn. A, B, C, D. Michael Bruce says, use the zigzag tool. Okay, I will do that. There's the zigzag tool. So that's the initial setting right out of the box. Let's change it up, shall we? Let's put this, let's just go down here and slide this little slider and see if we can get it to do the Elliott wave pattern. Come on, there we go. Oh, it says it's at a different spot. It's saying that this is the break down here. It says that's X1. It says this one here. It doesn't count this one right here. It counted that one. So that means that with this one, this here is X2, according to the zigger-zag. It likes it like that. Different strokes for different folks, different counts for different tools. I count it with the bulls and bears, but you can definitely count it with the zigzag. It's a cool tool. Why is that such a cool tool, Lan? Well, because I helped design it. That's why it's such a cool tool. All right. So there's the zigzag tool. Zigzag does the same thing as the bulls and bears, but you can see it counts just a little bit different sometimes. It's pretty much the same here, all the way back until right there. It counted down here. It liked that little pull back farther than this one here. Bulls and bears said, no, that didn't pull back far enough. This one is the one it counted, but zigzag said, no, that one. Okay. Okay. I'm fine with either one. I kind of like that one, but you know, for me, I like this to be called X2 here and this to be called X1 here. That makes this here. This here break is A1, right? That's our A1. This would be our B1. Now again, zigzag is saying that's B1. Bulls and bears is saying that's B1. So you can decide which is B1 for you. You got a choice. You can choose. I will choose bulls and bears. I like this one a little bit better. I'm going to call that an ABC inside of ABC. That's our fractal Elliott wave. I would actually label that personally myself. If it were me, what I would do is I would call that an A2. All right. I would call that an A2. You can have three A's, A1, A2, A3, right? You can actually have more than that. You can have A1, A2, A3, A4, A5, A6 if you want to. Just depends on what the market decides. It's what the market decides, not what you decide. These little pullbacks in here, they're the ones that you count, right? So a little 3-drive pattern called fractal drives inside of the overall longer term drive. So there you go. I'd call that A2. This is my B1, and that's the one right up in there. I'm going to call this right here. This right here is my C1. Right there. See those blue dots hiding back behind the zigzag? That's my C1. So as this blue light intercepts, that's where that would intercept. Of course, it's going to continue to trail. It's going to move. So those blue lights right there, when they intercept, this zigzag saying that's where they're going to intercept, that white line right there. That would be X3 A1S, A1 to the short side. First drive down to the short side. Very low probability of success. All right. Let's go to the win. 1, 2, 3. We bought calls on the well, we got in a little early, didn't we? That thing pulled back farther on the downtrend on that C drive pullback than we thought it would. Well, let's look at the Fibonacci numbers, and maybe it came right back down and touched 50%. So not really farther than we thought it would. It's right dead center, that Fibonacci sweet spot right now. So that would have been a better place to buy our long call. But we were buying long calls because that's when Cramer said to buy long calls. But we should have been smart enough to, well, I don't know. Sometimes it broke the yellow light. It broke the blue lights and started to rally. Can't say that we did it wrong. We just Should do another one right now. That's all I'm saying. Let's do that. Wynn Resorts. So let's come in here. How long is that one? 105 days. Let's just do from down here, let's do 42 days. And we're going to come in here. We're going to buy a call at the money, right? Boom. Oh, way up there. No, down here. All right, let's go ahead and do that. 42 days. We're going to pick up that other call right there. A little dollar cost average in there on the long calls. How's that? Okay, we're long win. That damn thing better go. All right. There, we got through that one. Let's say this is Cramer's Picks 1. And we're going to create a new one. We're going to call it Cramer's Picks 2. Jim Cramer Picks 2. Because he sent me another email, said, hey, Lan, look at these. But you know what? How about we do this one? I got something else fun to show you. Kathy Woods. How many of you know her? Picks 1. Kathy Woods sends me an email too. Cramer always sends me an email. He's so kind. Sends me emails almost every day. He and I must be good friends because he sends me lots of emails. And so does Kathy Woods. She's from ARK Invest. Many of you know her. Her symbols are ARK. Let's go look at that. ARKK. This is her investment fund, and it's a great fund. And if you want to invest in it, you can. You certainly can. I would go do a little bit of research into the ARK funds. If you're not familiar with them, there's several of them. There's ARKK, there's ARKW, there's ARKG, there's ARKF, ARKX. All right, so those are her funds. She's a hedge fund manager. So I'm going to type those in. There's ARKK, there's ARKW, there's ARKG, there's ARKF, and each one of these have different areas of interest. ARKX. All right, so as you can see, this is fintech innovations, genomics innovation, ARK innovation, next generation internet, space exploration. So this is different hedge funds that she manages. Name's Kathy Woods. She's a very famous hedge fund manager because a couple of years ago she was the #1 hedge fund manager in the world. She really kicked some hiney, did very well. And so she's very popular, and she created these hedge funds. And so each hedge fund has a different focus in a different area, and they're all innovative growth. That's the whole idea, is that she goes out and she finds generally small companies that she invests in, but she does do some bigger companies too. She also invests in, she's got Tesla, so it's not like they're all, but she sees Tesla as an innovative company, innovation. So all right, so these are all her funds. Look at that one, next generation internet. So this is all the internet stuff. She invests. This fund is all about internet companies. And look at that baby, rock and roll. That thing is taken off to the moon. These are some really fun. She's a hedge fund manager, and if you want to be in her hedge fund, usually it's really hard to get into a hedge fund. You have to be invited, or you have to be a very rich, wealthy person to get into a hedge fund. She's brought these hedge funds to the public through ETFs. And so that's why she's kind of famous, and it's kind of neat. It's very cool. She has a whole team of people, obviously, great big company. These are multi-billion-dollar funds. And so she invests from a hedge fund standpoint. And then you know what? Because her and I, we're like this, me and Kathy Woods. She sends me an email every day and tells me what she's buying and putting in and taking out of these hedge funds. So she sent me this email and she said, hey, Lan, here's your secret trade information. You have in the ARKK fund, I just bought SoFi, I bought Roku, and I sold my coin. In my ARKW fund, I bought Roku, I sold coin. In my ARKG fund, I bought Mass, I bought PSNL, and I sold Path. I also, in my ARKF fund, I bought KSPI, I bought TOST, I bought SOFI, and I sold Stone, and I sold Coin. And in my ARKX file, I bought PLTR, Plantair, I bought some IRDM, and I bought some TER, and I sold my AVAV. That's because me and Kathy are such good friends. She sends me an email and tells me every single day what she bought and sold in all of her funds. Isn't that awesome of her? If you would like to be friends with Kathy, you can go over to her website and she'll be friends with you too. And she'll send you her secret trade information just like she sends me. But if we wanted to, we could come in here and not trade it as a fund. We could come and see, oh, well, Kathy bought SOFI today. Why did she buy some? Oh, probably she's buying the dip. What do you think of that from a technical standpoint? I don't like this stock at all. Kathy, I don't know what the hell you're buying that thing for. Why are you buying that dog? She says, because you buy low and sell high, Lan. But yeah, but that's not even buying low and selling high. That's just buying shit. Well, I bought some, she says, because it's down here and I'm going to look for it to go back up. Okay. I'm not one to judge. You are one hell of a trader. So she also bought Roku. Let's go see what she bought Roku for. She bought ROKU. Oh, maybe that's why she bought Roku. You can see her little pop right there. She's probably the one that popped it. Roku, way down here in this bottom region, testing this previous low. Kathy Woods bought some Roku. She bought a lot of Roku. She bought Roku in ARKK. She bought Roku in ARKW. She bought, not in that one. Any more Roku? Nope, not in these. She just bought Roku, but she did buy Roku in 2 of her funds today. Or maybe that was yesterday. Yesterday, well, I don't know. It's popped today. So Kathy Woods bought some Roku. Should we buy some Roku? Can we buy an option on Roku? Come on, give us some options on Roku. We like options. Let's go out 100 days. $890. How's our volume? Oh, well, it's not bad. It's over 1,000. Volume's low. Let's see what the spreads are. Buy that call, baby. Buy that call. Oh, wait a second. What are these red lines in here for? Oh, I just put them in there. Lane, you're delirious. $890. What's the spread on that? It's $10. It's not bad. 10 cents. That's not bad. That's not bad. $8.90, 10 cents, $5. $5 to get into that baby. You could even bid a little lower. Say, well, I'll give you 4. Place your order. Did they take it? Come on, take it. Take it. Take it. Nope. Edit. All right. Give them $5. They take it? Come on. Take it. Take it. Take it. I'm not going to take that either. They're asking $8.95. We got to go up another one. Let's try that. $6. Take it. Take it. Take it. Take it. Take it. Take it. They're not going to take it. Let's give them $7. Come on, guys. Take it. Take it. And they're still not going to take it. Let's give them one more dollar. $9? Come on, take it. You little buggers. Give them all $10. All right, you rotten little. Took our $10. Well, we got the call to arms right here on the MACD, and the stochastics is way down there in the bottom region, and she's buying this Roku stock, so she might think it's going up right here. Let's see how well Kathy Woods does. What's the other one she bought? Oh, she got rid of her coin. Should we go look at that? Coin is isn't coin, that's Coinbase. I think Kathy Woods is big into she's just taking profits. She's just taking some profits. Look at that baby go. Yep, peeling off some profits. All right, nicely done. Well, let's leave that in there. Coin. She's taking profits on that one. We got to remember that she's selling that one, though. Let's make a note that she's not buying. Okay, so we come back. We'll remember that she sold right there. Boom. All right. What was the other one? You want to see some more of Kathy Woods before we go look over and see what Cramer's telling us to do? She said to buy MAS, M-A-S. Let's go look at MAS and see why she's buying MAS. Michael Bruce is asking me which I like better, the zigzag or the bulls and bears. Hands down, bulls and bears. Hands down, bulls and bears. That's why bulls and bears cost $1,000 and zigzag comes free in the base unit. How about that? Does that give you a little clue which one we like best? It's probably why it costs $1,000, because it's the one we like the best. All right. So, hands down, bulls and bears. Zigzag is pretty cool. It's pretty damn cool, but it can't hold a candle to that bulls and bears. Bulls and bears. What did I just do? Got distracted. Michael Bruce. Mass. What did she do? She bought Mass? Yeah, she bought Mass. This market's dead. I guess she's buying. I guess she thinks it's not going down anymore, and it's got some upside potential from that big previous run. I don't know. She's buying it. You guys want to buy some? I don't like this stock at all. Doesn't look exciting to me at all. Kathy Woods just bought a bunch. 908 devices. I don't even know what they do. Does anybody know what they do? 161 days out. We could get into, a call option's $140. There's nobody buying them. You have to pay $50 to get into that damn thing. Why would Kathy Woods buy that thing? All right. We're going to buy 50 shares, 100 shares, $700. We're going to buy 100 shares. All right. What kind of notes should we have on this thing? WTF, Kathy? Does Kathy have an E in it? Cathey? I don't know. Okay, let's go on. See what the heck. We're not real fond of that one. That was Mass. PSNL. Did we already look at that one? She got PSNL too. PSNL. Personalis. That's not a word, guys. Personalis Inc. Can't buy an option on it. I guess you could. You could try. $75 spread. That would suck. Well, some people have meant $50 spread. 224 days out. $40 spread. It's actually less to buy the one further out, but nobody's doing it. Like, the only open interest is 18 and the volume is 0. Nobody's trading this one with options. This is a Kathy Wood buy. She's recommending this thing. You got a 2-drive pattern up. Drive 1, drive 2, and then the whole damn thing failed. We didn't get our 3rd drive. So we got a whole reset. So that means this is A1 right here. Maybe that's what Kathy's thinking. This is a new A1. She's like, hey, Lan, I read your book. You think Kathy Woods read my book? Lan, I read your book. No, the thing is Kathy Woods and I both read the same book. That's why my book has this in it too. Kathy Woods, she read my book. That would be A2 if that thing breaks up out of that triangle, that little wedge foot pattern right there. There's no options. Trade. 5 shares. Oh, that's $8. That's not any good. Okay, another 100 shares. It's $175. It's $1.74. If that thing went from $1.74 to $2.74, that'd be 100% increase. All it would have to do is come up to here. That's why she's doing it. Look at that little sneaky. That's that little sneaky thing. If that thing just went up and tested these previous highs, holy moly. If it just went up and tested that high, they should double their money. It's $1.74, and that would be $2.43, $2.60. If it come up and just tested this high right here, she'd double her money. Of course, if it flushed, what do you guys want to do? It's in the stochastics is way up here in the overbought region. But our our MACD is just crossing the 0 line. Remember, that stochastics can stay up there in that upper region a long time. If that market keeps going, that's as high as it can go. Do you think we're going to get a pullback and break the blue lights right in here? Or do you think that thing's going to break that A2 and go higher? Do. How do you want to do it? There's a lot of money available if this thing goes up. If it goes up just to there, you're going to double your money. Back the truck up, Kathy Woods says. Okay, we'll buy 100 shares. We could double our money. We could make $174 if it goes up there. Okay, Roku. We already looked at Roku. SoFi, we already looked at that one. Is there anything else? Anything else looking fun? I wanted to see PLTR. Did we already look at that one? PLTR is another one she looked at. There's a couple more on there, but we're not, in the interest of time, we're not going to look at all hers. PLTR. Oh, look at that. Palantir. That thing's broke out. That thing's been in a nasty sideways channel for a long time, and it finally broke out. Kathy Woods is buying. Kathy, you read my book. So that right there is going to be our B1, isn't it? B1. That right there is going to be our A1. We're going to turn on the zigzag here for Michael Bruce. Chart over. Oops. Didn't want to do that. Chart overlay. A zigzag. Okay, that's how that thing's coming out. So let's tune it down just a little bit. Doop, there it goes. All right. So zigzag said this is B1 right in here. A little bit lower down in here, I guess. Right in there. See, the blue light put that little blue light right there. So it broke the blue light right here. So it's a little bit different answer. Still pretty damn good, right? Both of them, you can use them in combination one with the other. You can just use the zigzag if you want. If you don't have the bulls and bears, use the zigzag. It's pretty damn good. If you ask me which one's better, I'll tell you which one I think is better. But better doesn't mean that this one's bad. That's what that means. So this one here, bulls and bears saying that's our B1 right there as it broke above that previous high on those blue lights. On Palantir. Do we have options on Palantir? Do we have options? Go out 100 days. We do have options. One option for 100 days is $382. $105 days, $382. What do you want to do, guys? What are you going to do? What do you want to do? That was a good one, huh? You liked that one, did you? Okay, let's see. What do you want to do? What do you want to do? You want to buy this baby? You think we're going to rock and roll and go to the moon with Palantir, with Kathy Woods? Okay. Let's do it. Let's make some money. All right, guys. She's got a couple more in there that you can go look at. Go sign up for Kathy Woods' newsletter. She sends this out. You just go to her website. I don't know what it is. It's ARK Investment something or other. Search it on Google. You can sign up for her newsletter. She sends you these little reports every single day, and get your Kathy Woods report. It's fun. I like it. And then, of course, Jim Cramer. Where's our Jim Cramer letter? Oh, there he is. So here's our Jim Cramer letter. Do we want to go see what Jim Cramer's talking about? He's saying New York Community Bank Corp. He's saying end of trial of Novo Nordisk. An early trial of Novo Nordisk next generation obesity pill demonstrated significant weight loss in patients after 12 weeks. Shares of the Danish drug, which behind Olympics jumped more than 5% in pre-market trading. For the club, we own rival Eli Lilly as a weight loss drug play. Lilly shares were down 0.6%. Ha! I have Novo Nordisk and Claimer has Eli Lilly. Mine jumped up, his fell down. Let me see. Yep. Ooh. Oh, it's not that much. At least I'm up. My Nordisk, I'm making a lot of money. I've had that for a while. They come out. How many of you are John Grisham fans? Any of you guys John Grisham fans? You guys like to read John Grisham? Yep, you're right. And it's a good tool, Michael Bruce. So don't get me wrong. Just because I prefer the bulls and bears doesn't mean the zigzag is not a good tool. It's an excellent tool. I should know. I didn't make the original zigzag. I took the zigzag, put it into track and trade, and added all that other great, wonderful stuff, fish poop around it. All right. All that great, wonderful stuff that goes with it. So I took that simple little zigzag tool and turned it into an Elliott Wave Fibonacci tool. And it's a really good tool. Don't get me wrong. I love it. It's just not as good as the bulls and bears. Both are fantastic. We were going to actually just bundle the zigzag in with the bulls and bears so you got them as a combination tool. But then we were like, that feels a little hyperbolic there. So we just left it in the main application. We felt like we were kind of don't want to nickel and dime everybody for every little thing we create. Just put it in the main application. So that's what we do with zigzag. All right. Anyway, I was trying to say, any of you guys John Grisham fans? Michael Bruce loves the parabolic SAR, which is a fantastic tool as well. Fantastic. Yes, PSAR. We love the fantastic PSAR. So those three, bulls and bears blue light, parabolic SAR, which is actually the parent to the blue light, and then the ATR. Those three dot systems are my favorites. I love them. That's what we call the cat's meow. When you have three contracts and you have three trailing stops, you put one on the blue, one on the red, which is the PSAR, and you put one on the yellow, which is the ATR. And then you got the cat's meow. That's what I call that. The PSAR holds your stop back a little bit farther away than the ATR. The ATR holds it a little closer. And then the bulls and bears blue light actually holds it back even a little bit further than the PSAR. So it's kind of a 3-tier thing, whether you want mama bear, papa bear, or baby bear. All right. So that's kind of what those three dot systems are. And when you use them combination one with another, you get the cat's meow, and you can put a stop on all three of them. So different strokes for different folks. Which one's better, Len? Well, we use the bulls and bears blue lights to count the Elliott waves. So it's the best if you're going to use it for counting Elliott waves. But it's not the best always for trailing stops because it kind of holds your stop back a little bit farther. It waits for those markets to pull back and break those blue lights to prove that Elliott wave. So you use that parabolic SAR, which could pull it in a little bit tighter, get you out sooner, a little bit more aggressive, but it also holds it back a little bit further. So if you get a flush, it doesn't stop you out until you lose most of your money. That's why you use the ATR. The ATR is more of that's why we use the ATR down when we're scalping, because we don't want to take big risks, right? So we want to hold those stops really tight when we're scalping. But that's why you got those three dot systems. It's not one size fits all. We don't just use one tool for everything. And so Michael Bruce is right. There's other tools in there that you can use for these different scenarios. These seem like great stocks to grow a small account. Absolutely. These things down here under $50 are good stocks. But anyway, Nordisk. I'm trying to tell a story here, Michael Bruce. Are any of you guys John Grisham fans? You guys like to read John Grisham books? He had his book where he actually turned it into a movie called, I think they turned it into a movie. Maybe that's not the one they made a movie out of. Skinny Jims or Jim Skinnies or something like Skinny Jims or Skinny Slims or something like that. And he was a company came out with these skinny pills, pills that made people skinny. And he went and Of course, it's a lawyer show, so they had to sue him. It's kind of a good show. Good book. Go get that one. Anyway, that's what this is. I call these skinny Jims, these Novo Nordisks, next generation obesity pills. Skinny pills. You watch how many lawsuits come out after this. They're all going to sue these guys. Anyway, Novo Nordisk. Makes you skinny. They're skinny Slim Jims or something like that. What's the stock symbol for them? I don't want to put that in Kathy Woods. Let's go put that over in Jim Cramer. Didn't we do a Jim Cramer too? We did. It's right here. Skinny Jims. Novo Nordisk. Novo Nordisk. This one right here. Common stock. That's it. And I bought it clear back here. I've been hanging on to it for a while. 1, 2, 3. Look at that baby. And it's rocking and rolling right now. They just got good news. And that baby is going to the moon. If you buy it now, though, buying high. But that's a strategy. Buy high, sell higher. Just be careful with that one. It's a tough one to do. Buy high, sell higher. You might want to just keep this one on your watch list because I've made a lot of money on this stock right now already. Lots of money. All right. Mitsu boosts its high target. So he's saying NVIDIA is still a good buy, or it's holding. He's holding his NVIDIA. Broadcom. Should we look at Broadcom real fast? And Broadcom. Let's see what Broadcom's doing. We know NVIDIA. We looked at that one already. BROADCOM. That's how he spelled it. I don't think that's the right spelling. Oh, I guess it is. Broad. OA. It is. Okay, there's Broadcom. AVGO. Wow. Do you want to count and measure that one for me, Michael Bruce? There's our buy signal, or there's our turning point. And then we just went drive 1, drive 2, drive 3, drive 4. We're in the 4th drive. Wow. This market's on fire. That's your A. I'm not going to label all these. That's your A, B, C, D. We're in the D drive. We're in the 4th drive. There's your unicorn, guys, right there. There's your unicorn. We don't see those very often. Those are rare. Broadcom. What are we going to do with Broadcom? You going to buy land? Hell no. You think I'm going to buy a stock at the top of the 4th drive? You got to be kidding me. But it might go higher. Oh, you are right in that. It might go to the moon, but I ain't going with it because I do not buy at the top of a 4th drive. I do not buy unicorns. I'm going to look for that thing to come back and give me another red arrow. When I get another red arrow to the upside, I'm going to go long back up the truck. Okay. But that might not happen for a while. And if it just keeps going and making a C, D, E, F, G, H, I, J, K, L, M, N, O, P, see ya. Bye-bye. That's all I can do. I don't buy up there. That one I missed. All right. Hikes its target bullprint advanced micro devices, AMD. Is AMD symbol AMD? Probably. Oh, my holy. There's another one. Wow. Look at that. Drive 1, drive 2, drive 3. What did we get? Got a retracement, got a reset right there. Just like I was saying on Broadcom, I wanted to see, right? Drive 1, drive 2, drive 3, drive 4. I want to see another arrow. Same thing on AMD. Drive 1, drive 2, drive 3. I got my arrow right there. I want to be a buyer. Now I can't buy up there. Dadgummit. Why didn't you point this out to me sooner, Mr. Cramer? So I could have bought it back here. Because you wouldn't have done it, Land, because you were at the top of a third drive. You'd have waited for the ABC. That's an A1, and you hate A1s. You hate X3, X1, X, that would be X3. 1, 2, 3, X3, S, A1. You wouldn't have taken it anyway, because that's a really low probability of success trade. You'd have said, I ain't taking it. I'm looking for the B1. That's what you would have said, Land. You would not have taken that anyway. Shit. damn it, all to hell. All right. CrowdStrike. Ooh, 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 ooh. He's going. Does he like that one? It looks like CrowdStrike is the winner for now in the cybersecurity space after a knockout earnings report this week. Swinging during my interview with Wednesday on night, Citi raised its price target for CrowdStrike to $425. Oh, they say this thing's going to go to here, $425. How much of this is a manipulation and lie? We don't know. You never know. That's why you use your technical analysis, but that thing is breaking a new blue light system right there. Are you going to take it, Lan? Are you going to take it? Are you going to take it? Are you going to take it? What are you going to do? What are you going to do? How many of these are you going to take over and go? And I know we're doing this in the demo account because it's education stuff. But how many of these are you going to go over and do in your real money account, guys? Which ones are you going to pick? Which ones are you going to go do in your real money? 105. Let's see. What's the options for 100 days out? Do we need 100 days out? We do. We want 100 days. Oh, that's $3,600. How much money do we have left? Buying power. We got $58,000 in buying power. Ooh, do we want to do that? CrowdStrike Holdings. That's a $336 per share stock. And the that's expensive. Let's look at Foot Locker instead. You know, I need to talk to old Jim Cramer, and I need to tell him, look, if you're going to send me a newsletter, you need to put the symbols in here. Don't just come and send me the name of the company. I want the symbol. Foot Locker downgraded to hold equivalent ratings from buy at Tesla Advisory Group, the retail-focused research shop site, more granular. You want to see what I'm reading? Group, the retail-focused research shop cited a more granular recovery in operating margin than originally expected. Foot Locker plunged 29% on Wednesday after earnings and down another 1% in the market Thursday. However, in our earnings analysis, we suggest the pullback may be overdone. Okay, is it going to be a rubber band? Is it going to pop down and go, oh, that was too much, go back up? That's what Cramer says it's going to do. What does that mean to you? Well, it means there's a buying opportunity, I guess, if you think these guys are going to sell a bunch of shoes this spring. Nice, big, long, natural trend line up that thing, and boom, it fell. Drive 1, drive 2, drive 3. Just like a train on rails. Okay, coming back, Fibonacci ruler, bottom to top, dun, 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 right into the Fibonacci sweet spot. Right down here at 61.8. Just like that. There you go. How about that? I ain't buying it. I ain't going to buy it. Why not, Lan? Cramer says you should buy it. Well, I don't think that means it's going to go up. Just because it fell and it stopped falling, I don't think it's going to go turn around and go back up. We're going to wait. Going to wait on that one. Oh, what's he saying about Apple? The hits keep coming for Apple. The latest is another chapter in a long-running feud with the Fortnite creator Epic Games, which is claiming Apple rebuffed its application for a developer account that it would use for a third-party apps store for iPhone in Europe. A new antitrust law in Europe required Apple and other tech giants like Google, Alphabet to make changes to the way apps are distributed on their platform. Poor Apple. It's getting his hiney handed to it. Federal regulate. Well, that's good for us. You have to realize Apple is an amazing company, right? We all love Apple. Woo! Apple is great stuff. Don't want to say they're not. They are great stuff, good stuff. We love Apple stuff, right? Apple's great company. We want to buy more Apple. Okay, great. Where do you want to buy more Apple? When it's beat the hell up. That's when there's blood in the street. Buy that baby. Don't hang on to it when it's breaking all-time new highs. That's kind of a hard time to buy Apple. You don't want Apple up there, right? But now Apple's getting beat up. We're going to watch that baby. We're going to buy us some Apple really cheap. We're going to buy Apple on the cheap. So watch that baby. That's going to be some opportunities. Federal regulators rip Boeing for being cooperative in their investigation. Alaska Airlines. What are they hiding? Let's go see what Boeing's doing. Oh, well, they're basing. What do you think's going to happen with Boeing? Doesn't necessarily mean it's going to rally, but huh. What do you guys want to do with Boeing? I don't want to buy it right now. I'm going to hold on, and we're going to just watch it. All right, let's see what we got here. One more second. Sunday school lesson. All right. Plan your trade and trade your plan. All other markets are codependent on the S&P. All right. If the S&P is an overall downtrend, don't expect the individual stocks to make big gainers. Don't load up on buy signals during an overall bearish market, although rule breakers can often be your most profitable trading opportunity. Many traders seek out rule breakers. Okay. So if the S&P is boom, 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 you're not generally going to have big rallies coming out of that. They're going to kind of, the reason the S&P is down is because all the big players are coming down. Wait for that baby to turn and be bullish and then start looking for sky shots, right? I feel so much better when we're together. All right. So you can see that big old guy, he's the S&P. All the other stocks, they're all dependent on the S&P. And that's just because it's such a big, powerful index. So that's your Sunday school lesson for today. And if any of you guys have any questions, please post them out in the comments. And I've noticed that there's about 3 or 4 comments I haven't got to yet, and I haven't answered them because they're good questions. I want to give you a good, solid answer. So I will go out there a little bit later, and I will answer your questions. Ask your questions in the comment section. If you send me the email, I generally don't see it. I get so much spam. How about you guys? I'll get a whole bunch of spam. So I don't just don't get emails because the emails are worthless nowadays. It's just kind of a worthless system. So too much spam. And so if you send me an email, I probably won't see it. So go out there, post your questions, comments in the comment section, and I will answer them out there. I think it's a better way to stay a little bit spam free on our questionnaire. And then other people can see your question. And then that helps everybody else too. So go out there and look at what the other questions and answers are that's been in some of the past videos. I think you'll learn a lot from the answers I've been given. And guys, if you wanted to play the YouTube game with me, hit that little thumbs up if you thought today was helpful. If I see lots of thumbs up, we'll do more of this kind of stuff with the stock market. So I want to see thumbs up so I know what to do. If you guys like, I look at those thumbs. If you guys give me thumbs up on something, I'm like, hey, they like that. I'm going to do more of that. If I don't see a lot of thumbs up, I'm like, oh, that was something they didn't like, so I'm not going to do any more of that. So if you like today, give me some thumbs up and we'll do it some more. So hit that little bell so you know when we're going to do another show, and then hit that subscribe button. For those of you, I know we got a lot of guys in here who are watching who are not subscribed. I don't know what they're scared of, why they're afraid to push that little button, but go ahead and subscribe, and we will see you guys on Monday. Have a good weekend.